What's up, guys? Thanks for joining me for today's video. In this video, what I want to talk about is how to identify a market that's in transition. Before we get there, though, let's talk about what this means. So the idea of gentrification is when a neighborhood or an area of typically an urban environment goes through a transition from not so nice to really nice. Areas that become some of the hottest areas, hottest neighborhoods in the city. We've seen this in Philadelphia. I've seen it personally a couple different times. First neighborhood I saw the transition begin was University City. I had my wife's best friend went to Drexel University for quite some time. She's a doctorate in engineering and went through that whole process. Well, from the time that she was 18 and started her undergrad to the time she graduated with a PhD, some huge changes in that neighborhood. I've also seen it in Graduate Hospital, Northern Liberties. I've seen Point Breeze. Now we got Brewery Town in the midst of gentrification. You've seen this in Francisville, a couple different neighborhoods throughout the city, but they all have the same trend and the same contributing factors that go into that developing neighborhood, all right? So here's typically the process of gentrification. It all starts out with the students, right? They identify a neighborhood. It's kind of cool. It's cheap, inexpensive to live. So they move into the area. And these artists move in and that attracts some student rentals. And so you start to see a migration of students moving into the area. Then these students start graduating, right? And at that point, they still want to hang out with their friends. They still want to go out and do that kind of stuff, but they have a job, and they've got some money coming in. And so they might start buying in these areas or renting some of the renovated properties in the area. So we've got the artists, then we go to the students, transition to the young professionals, and finally, as these young professionals, these students and other people start growing up and they start having kids, they start moving into these neighborhoods, the families is like the last phase. That's when you start to see a lot of local bars and restaurants popping up, retail and that kind of thing. The goal here is, one, to identify these areas, but also to identify them at a time before we get to the families. Because once we get to the families, we've reached kind of the height of the market. And yes, there's going to be some increases over time, but the whole incentive and the whole attraction to these developing markets is the fact that we're getting decades of appreciation within just a few short years. So we want to target these areas when they are in transition between students and young professionals. That's when the ball is already rolling. We already know that this is not a speculation play. The neighborhood is already in the midst of change. So, we've got some security there, but there's still a ton of upside in the market. All right. So let's talk about how we identify this. Gentrification cycle. I talked to you about that already. So the first thing that we're going to look for are new permit applications. In Philadelphia, there's a site you can go online and you can see new permit applications throughout the city in different neighborhoods, even down to the block. These new construction permit apps are going to be a huge indicator that something's going on there. It's not a clear-cut, obvious thing, but if you watch it, you'll see trends. Maybe one or two applications on the block, and then all of a sudden, a year later, now you've got 7, 8, 9, 10, 15, 20 applications on a block or in a specific area. That's a good indicator that the area is going through change. Second thing is new construction. So new construction, there's a fixed cost to what it's going to cost to build from the ground up. These costs are typically going to be a little bit higher than what you're going to see on a rehab project. And because of that, a neighborhood can't go into the phase where there's new construction popping up unless price points are pushed to a point where it makes sense to invest in that area. So you start seeing new construction applications and new construction builds popping up. That's a good indicator that the area is going through a transition. Some important indicators to look at here are varying property conditions, okay? So if you're going and looking at a neighborhood that's going through transition here, I'm going to use Brewery Town as an example. About 3 years ago, a friend of mine recommended to me, he said, this is the next best neighborhood. If you are looking to buy some long-term holds, this is the area to start buying it. So I went and I drove through the neighborhood, and I was shocked at how poor of a condition the neighborhood was in. You know, I'm driving down 1200 block of North Dover Street, and it's like board ups and tear downs all along the block. And then there's the one house that went up for sale and sold for $185,000, and that started the trend on the block. Now you go down the same block and there might be 3 shells in the block, everything else is renovated. But we're looking for neighborhoods where we've got different types of conditions of properties, where we've got the new rehab, we've got the new construction, and we also have the house that's been abandoned for 30 years. This kind of these different types or conditions of properties are going to be a good indicator that there's some change going on. Okay. Next, we will look at the vehicles, right? What we want to look at is drive up and down the street. People that are buying, people that are young professionals, people coming out of college, making $100,000 a year for the first time, they're probably going to buy a nice car. As you see nicer cars coming on the block, hey, this might be a good area to invest in. Keep your eyes on that kind of thing. And last but not least is the neighborhood occupants. You start seeing, more and more hipsters moving into a neighborhood. It's a cool neighborhood, right? That's the kind of, the kind of momentum that you're looking for as the neighborhood goes into transition. You see a lot of young people living in an area, walk into restaurants or bars on a weekend evening. There's a good, that's a very good opportunity to invest as you see the different kinds of houses in the neighborhood, as you see, different nicer cars moving into the area, as you see younger occupants, in the area, hipsters and the like moving into that area. It's a good indicator that this is like an up and coming neighborhood. All right. So that's it for today's video. Short, sweet, and to the point. If you're looking to invest in a transitional area, go back through the video, take a look at some of the contributing factors, identify those markets, and jump in with both feet. That's it for today. Thanks so much for joining me. Until I see you again next time, I want to wish you the best of luck in your real estate investing. Take care.